On today's episode of the Homes Real Estate Podcast, we're talking about student loan debt and the effect that it may have on the housing market. Stay tuned. Hello, everybody. I'm Peter Toering with Coldwell Banker, and welcome to the Homes Real Estate Podcast, your home for all things Michigan real estate. I wanted to talk to you today about, some of you have heard I've done some in-depth analysis on certain items, on renting versus buying, a couple other things. This is not going to be like that. I'm not really going to go over too many of the numbers, just give you some of my thoughts. So let's talk student loans and the effect that it might have on the housing market. So I was looking at this the other day. I was actually talking to a lender friend of mine, and he mentioned that we're not seeing. We were talking about, could this be the next 2006 before the 2008 crash? The markets are fantastic. We have seen them cool off a little bit over the last month or so. But generally speaking, we're in a pretty boom market. We're in a great economy. And we've said, how can we avoid 2008 again, the crash, things like that? And we said, well, we've put regulations on mortgages. We have increased all these different lending standards. And I'm sitting there thinking about this, and I said, well, yeah, we did with mortgages, but have we replaced unattainable mortgage debt with unattainable student loan debt? So I started looking into this, and I saw the massive amount of student loan debt we have in this country, and I started thinking about if you take let's say your student loan payment is $500, you then also have a mortgage payment. Are we not just running into the same types of per month debt that we were in those days? And I also look too, the wages, the price of college has gone up exponentially, and the wages have not. And I'm thinking about this, and I was saying, well, I was talking to a buddy as well who said, well, why can't we just regulate student loans at interest rates for mortgages are at 4.5%, 5%? Why can't we run student loans at 4.5%? This got me thinking. Is the reason that college is so expensive because we have super low lending standards? Is the reason that we might have a student loan bubble crash, have the bubble burst, is it because of the lending standards? And might we need to take the same approach with student loans as we did with mortgages? And I know this might be a kind of an unpopular opinion, but if you think about it, if everybody's able to go to college prices can go up. So maybe instead of saying, well, we need free college, maybe we need to regulate student loans. If you're going to buy a house, and sometimes we're talking about the same amount of money too. You can have, I talked to someone the other day who had $100,000 in student loan debt. That's a mortgage. That's a mortgage. So if we're going to apply for a $100,000 mortgage, we're going to make sure that I make enough money to cover it, and I don't have enough additional debt to cover it. I guess my thought here is, why do we not look at, not necessarily income, because as a student you're not going to have a lot of income, but why don't we look at projected income? Look at the amount of jobs that are available. Ask, okay, what major are you going into? What are your grades like? What's the projected income for that field? And then we think we can go and we can base more student loans, and not saying that the loan companies are going to only approve STEM loans or something like that, but have an appropriate ratio of, here's liberal arts degrees, and here's business degrees, and here's science degrees, and so that you could be given more student loans based on your projected income, and then also that your student loans might be conditional upon you keeping up a grade point. Which, by the way, this is all seeming to be very hypocritical from me, someone who does not have a college degree. I did spend some time in college. But went to community college and just kind of paid as I went. So this is just what I've been thinking about and thought, a student loan is an unsecured loan. Why don't we try and secure it somehow? Because you can't default on them. You're never going to pay them back. Why don't we start looking at that? And I think, too, if we did that, college would become more affordable. Because if we're not handing out loans to everyone, I think the reason, and again, I'm notably uninformed on this. I've just done some reading. But if everyone can go to college, everyone can get an $80,000 loan, college prices can keep going up. And if the government backs these loans, just like they backed all of the unaffordable home loans, we could have a similar crash. I think this is really important to look at. And I don't think that we can keep sustaining this amount of debt on the type of wages we have. Some people might argue, well, we need, wages need to go up, and that's certainly part of it. But again, if we can keep student loan, down with 20 years, I was talking to my dad, and when he went to Grand Valley back in the day, he worked at a part-time job at an appliance store and paid for his college, his whole university degree. Now you could work 35 hours a week at a part-time job, you still could not pay for your semester of college, even if you had no other expenses. Well, maybe you could if you had no other expenses, but most of us have got some expenses. So my thought here is number one, how can we stop the student loan crisis? How can we make college more affordable? But also, I think that this is really going to have an impact on the housing market. If these, if people can't pay their student loans and they can't default, are they going to start defaulting on their home loans? Are we going to have another 2008, but it's instead of being caused by unaffordable home loans, is it caused by unaffordable student loans? And I think this is really something that we need to look at very seriously. I think it's something too, if you're planning on buying a home, really take into account, can I afford my home loan? Even if you're pre-qualified, if something happens, could you afford your home loan and your student loan payment? And not just at the minimum either. And I think that's the other problem too, is just like paying off a credit card. If you pay the minimum, you're never going to get out of it. And unfortunately, the student loans seem to be the same way. But really take a hard look at that, and maybe you need to adjust the affordability of your homes. Thankfully here too, like I said, our market is cooling off a little bit. Our interest rates are still low, so homes are still affordable. Make sure that you're taking into account your student loans when you're applying for a mortgage. Thanks so much, guys, for listening. I know I've just got some rambled thoughts here, but thanks so much. We'll see you next time.